Right, let's have a closer look at dollar index in relation to these bullish moves that we have seen in the past 2 days or so, where price has took off from an area where we were expecting price to bounce, because that's our daily bullish OB, and then we had price dip into our monthly bullish order block. So this chart is not new, guys. If you have been following on the YouTube focused videos that I always upload, like every Sunday or Monday, it depends on which day. So this chart shouldn't be new to you. You should already know that from this level here, this is the level which I mentioned that I'll only be interested in the market once it drops down there, and then we're gonna take long trades to the upside, and then we are shorting Euro USD, we are shorting GBP USD, and we are long on the yen. So it did came back again to the same level, but this time we had buy stops below here, so those buy stops were cleared, and then we took off again. So this is where the British pound trade that I just uploaded now, that's where the idea panned out from, you see. So when dollar index rallies, you're gonna see that the British pound and the euro, they normally decline, meaning they will be bearish. So we are just going to have a short analysis on what I'm expecting the dollar to be doing in the coming week or two or so. So we have seen that on a monthly chart, let me drop to a monthly chart. Don't worry about my wording. Those are the highlights or areas that I would like to take note of on the lower time frames. So we had price moving nicely back into our monthly bullish order block, which we highlighted a few weeks ago, I think a month or so ago, a month and a half. I did highlight when price was still up here, I did highlight that this area here is the one where we're going to be hunting for long trades, and that's where we're going to be anticipating the dollar to stage probably a mini comeback, or whether it's going to be a sustained comeback, because already we've seen that dollar has been under pressure the whole of the COVID period. In September we had a low formed, you see. Remember the seasonal tendency that I highlighted, that we should expect at least to have another low formed on dollar either in August or in September. So we had that low formed. We had first the low of September, then it was breached. The low of August, it was breached again in September. Right at the beginning of September, market formed another low. So if you go back in history, if you go back to the previous years, you find out that dollar index usually likes to create a low of the year somewhere around August and September. So right now the stars are aligning. We are currently in the election year. Number one, we have the stimulus package which is being discussed at Capitol Hill. That's number two. Then we had Jackson Hole, where Powell did try to defend a bit for the dollar. And then we've got what is the final thing that we've got? We've got the China and US relations. So you find out that all these stories lead to mainly dollar being under pressure, besides for the Fed, Jackson Hole. So Jackson Hole, it gave us an insight, a very good insight. If you are a long-term trader, it gives us a very good insight in determining the bias that we could be looking forward to on the dollar. So with them not looking to further increase the inflation rate to above 2% and keeping the rates at 0 or between 0 and 0.25%, that in essence showed that the Fed, they were looking to do whatever it is. They are looking to do whatever it is they can in their hands to make sure dollar doesn't keep dropping to the downside. But that is not guaranteed, you see. But when you have such kind of information, it's always good that you put that into perspective when you're doing your analysis, you see. So already you have seen dollar has bounced. September, we are already, this is the first week of September, and we have already moved to the upside quite massively. So looking at dollar, I was anticipating price to dip down into our monthly bullish order block and then reject to the upside. So now I'm going to go on to a weekly chart. Now on the weekly chart, you can see now I've got my weekly bullish rejection block highlighted in blue and the bullish order block on the weekly. Our last down candle where we had this candle here trade lower, clearing the buy stops below. We cleared the buy stops below this low here. So that's coming in at 92.17. So that's an institutional price, 92.20. We cleared those sell stops, tipped into our monthly bullish order block, then we rallied. So once you had seen this price action here, this week dropped down our last down candle, following week we cleared the sell stops and rallied and closed above into the bullish order block on a weekly. The start of this week would have given you very good opportunities to go long on the yen and to short British pound against US dollar, short USD JPY, and also long assets like AUD USD, NZ USD. But remember, it's not like an instant thing that you do that. Okay, so we've got dollar rallying, let me go short AUD USD, let me go short NZ USD. You have to wait for the right moment, the right time for price to reach the right levels, the correct levels that you'll be monitoring. So looking at the weekly for dollar, we can see already price rallied from our bullish order block. And this chart, guys, is not new. If you've been watching the weekly focus video, this is not a new chart. This chart has been there. These levels have been highlighted long time ago. So now we are bullish on a weekly. We are in a weekly bullish order flow. Then we come to our daily. Now can you see this down candle here? This is crucial. This down candle, this down close candle, this is very interesting. Look where it closed. It closed on our weekly. It closed on our weekly bullish order block. Remember that level which I said I'll only be interested when price comes back into this range. See? So you'll be anticipating price to, at least if it does, trade back into this range here, right? Then you look to be a what? A buyer. Right now price is approaching our bearish order block area where we're going to be anticipating a bit of resistance in price. You see, we're going to expect a bit of sellers coming back onto the DXY. So the levels that we need to highlight, the buy stops here, these buy stops, once we have price trading up here, right? Once we have dollar index trade and close above, then this area here becomes crucial for long entries to the price. This will be probably a short-term confirmation of bulls taking control, right? It will be a clear confirmation, a short-term confirmation, not like a whole, because election year, anything can happen. So if we do close above here, you'll be targeting this up close candle during the down trend, you see. So this will be your target, that up close candle, this one here. So this area is going to be your target. If price does clears up these relatively two equal highs here, you see, already we are almost clearing this. So we're gonna see what tomorrow's trading range is gonna look like in today's close. But yeah, I'm anticipating further pushes to the upside on dollar index. So now let's see on H4 what we have on H4. Now on H4 you can clearly see where price is heading. We are heading into this range here. So what I'm gonna do here, I'm gonna extend my levels. I'm going to extend these levels here so that I'll be able to see exactly what price action is doing. Right, there we go. That one is extended. Right click properties, I need 2021 here. So you can see now this is the levels that I'm going to be watching on dollar index. So right now it's a case of being patient with price, and if you are in a short trade on Euro USD or British pound against USD, if you are in a short trade on those two assets, you might need to scale out a bit of your profits, because we could see price facing a bit of resistance here in this area here, you see, especially in these two relatively equal highs. So the way price is going to behave when it reaches this area is crucial to us either taking short trades or long trades to the upside. So now let's go to hourly chart. Let me zoom out a bit. So you can see on an hourly chart we are already approaching our bearish order block, and we have cleared this high here. So we need to be watchful of what price action is going to do when it dips into this bearish order block. So we could see a bit of resistance there. We could see sellers coming back into the market and then push the dollar a bit further to the downside, or we could see a proper clearing of these equal highs, and then market is going to push all the way to the upside. So the signs and the fundamentals to support a bit of a comeback in dollar, they are all there. So it's a case of knowing which levels you are going to be hunting for long trades on DXY. These down close candles, especially on H4. If we go to an H4 chart, let me zoom in quickly. You see these down close candles here, so they will offer better opportunities for you to take the market to the upside. You see, this is where you'll be interested in the market. But as for now, just exercise a bit of caution and make sure if you're in a trade, scale out a bit on your positions and have probably a trail stop, so that you safeguard yourself to losing what you have got already from the market. Yeah, so this is what I wanted to share with you guys regarding dollar index. So our chart, which we have been using for the past 2-3 months now, is still active. If you haven't watched the previous forecasts, guys, you can go back onto the YouTube channel and rewatch, so that you get to understand where we have come from with this pair. So with that, I wish you guys good luck and Happy trading.